If you're interested in decoding the complexities of China's national security outlook and its military modernization, check out Takshashila's latest expert capsule course offering China's Defense in the New Era. Visit school.takshashila.org.in and enroll in the course today.
Welcome to All Things Policy, a daily podcast by the Takshashila Institution. We are a bunch of policy nerds based in Bengaluru, and we like bringing fresh perspectives to Indian affairs and Indian perspectives to global affairs. So grab a cup of coffee, sit back, and join us for today's chat.
Hello, everyone. Welcome to today's episode of All Things Policy. I am Anwesha, your host for today, and I'm joined by my colleague Anisree Suresh, who researches geoeconomics at the Takshashila Institution. Lately, we are seeing gold become an increasingly valuable global reserve asset, and for today's episode, we'll try to break down the impact that Trump's policies might be having on this trend. So, just to set some context, traditionally, what we've seen is central banks hold different assets like US Treasuries, gold, and foreign currencies. And for many years, US Treasuries enjoyed a strong position as a major part of these reserves. As this trend is now shifting in a big way, gold has started to play a much bigger role and recently has surpassed the euro to become the second largest global reserve asset after the US dollar. For the first time since 1996, gold also represents a bigger share of central banks' reserves than treasuries. So, Anishree, given Trump's tariffs, trade uncertainty, and now this trend of, central banks stockpiling gold as a reserve asset, which has then driven gold's ascendance as a reserve asset, what do you think some of the geopolitical catalysts might be, which has driven this trend where, gold's value has increased?
Thanks, Anwesha. So let me start with this disclaimer that I would not say that dollar's dominance is declining. That would be the key idea that we are putting out as part of this discussion. But so despite, like you mentioned, there's a lot of geopolitical uncertainties, and there is clearly a concurrent ascendance of gold, like you have rightly mentioned. And this is a combination of significant geopolitical and geoeconomic shift that's happening that we see every day has been one of the major factors that's pushing this ascendance as well. Having said that, gold has always been it was already there as a reserve asset, but right now with all the geopolitical and geoeconomic shifts that's happening, along with you have a certain erosion of institutional trust that we have on certain global institutions and certain US institutions to some extent, and certain concerns over US fiscal, monetary stability, trade policies, and all these things. So all these factors are accelerating a shift toward probably not towards de-dollarization. That's definitely going to be there, but perhaps a much more multi-asset reserve system, and definitely it's positioning gold as a preferred natural reserve asset. So having said that, if you look back to some years back, especially since 2022, there has been a growing trend to diversify away from the dollar as a reserve asset, especially among emerging economies. So there are multiple reasons why it. Since we had the Russia-Ukraine issue, there is an aggressive use of US financial sanctions, which leverage the dollar and its financial architecture to impose sanctions on rivals. And that has kind of accelerated currency diversification to some extent. But again, this practice coupled with the current US tariff policy, especially since April 2nd, what we have been seeing, is causing global investors to lose faith in the reliability of the US financial architecture as well. To some extent, it's not happening at a very rapid pace, but slowly you can see certain trends being set as well. So the trade protectionism or all the tariffs that Trump has introduced, and we have had multiple podcast discussions on this before, so you guys can check that out. And all this trade protectionism and the global trade disruption that's happening because this is all leading to creating certain impact on the demand for the US dollars in the global market. So to understand this much more detailed, you have to see that the US needs to run a persistent trade and fiscal deficit to provide liquidity to the global economy. In the sense you want a supply of dollar in the global market And that's the only way, how you ensure that supply is by having trade deficit. So the US has to run trade deficit. But with these tariffs, with these policies that US administration is bringing, they are trying to reduce the trade deficit with other countries. However, only through trade deficit and running a fiscal deficit, we'll come back to that point later, the liquidity of the dollar, that means the supply of the dollar, is ensured globally. So as global demand for dollars increases, usually, so the US has to issue more debt to meet this demand. That leads to some kind of economic imbalances in the US system. And the larger size of the US economy and demand for US government securities, which provides higher yields than any other securities or any other bonds, which have made US financial markets the deepest and most liquid markets in the world. That's how it has been working till then. So as a side effect of this, United States kind of acts as a locomotive for other global exporting countries, including China, including Japan, Germany, and all the other countries. It provides that growth impulses for export-oriented economies, who is high saving rates and current account surpluses of all these countries are the counterpart to US deficit in a way. So that means, for many years, differences in the composition of US financial assets, largely FDI and other equity and liabilities, provided the United States with a positive foreign income balance despite having those foreign liabilities and trade deficit and everything. So that means if the US dollar has to remain as a dominant currency in the world, it has to run a trade deficit as well as a fiscal deficit in its domestic economy. Having said that, so these tariffs and everything has certain impact on the supply of dollar, but the network effect is also very important when it comes to determining the reserve status of any currency, right? Hence, more it remains in the network, more it remains in the system, more people use it and all those things. That means the dollar will continue to stay as it is. However, you can slowly see a trend developing that's moving, countries, especially central banks across the world are moving away from reserve assets. Moving away from dollar as a reserve asset to gold and other much more reliable options as well. But the trend is happening at a very slower pace. So it's nothing alarming as such, but it just is a trend being set by the trade policies of Trump and all those things.
So you mentioned, Trump's policies and sort of, geopolitical factors that would have an effect on, gold's ascendance. But if you were to, talk a bit about what the financial catalysts might be that could potentially drive this shift in the global monetary system.
Yeah. So financial instability, all the fiscal recklessness, and all the risk to US monetary institution, they do definitely serve as a key catalyst to that simultaneously weakens the dollar and boost gold's appeal as well. So main thing is one of the research by Peterson Foundation said that debt service, that is all the interest and the money that the US Treasury has to repay to the whoever is buying their Treasury securities. So this debt service currently absorbs about 16% of the US budget. Okay. So the amount of US debt issued by the government currently stands much above $30 trillion. Okay. And out of this, 1/3 is foreign held. So although much of the foreign held debt is owned by allies or the countries that US has much more closer relation, they have been gradually reducing their exposure to these debts as well. These treasury securities, and that's slightly slowly trickling down the prices and raising yields as well. So along with that, you can also say that the shocks to bond markets and whenever there is a change in the tariff policy, that affects the investors' confidence in the market, and that leads to this trend is coinciding with that trend, which eventually leading to weakening the dollar as investors seek to diversify their holdings. Then second risk is, again, by the same Peterson Foundation also has said that the government's inability to solve its fiscal dilemmas leads to excessive bond issuance that hits markets that have lost some of their appetite for US government securities. So this leads to a debt servicing drain that crowds out other investors and signals a diminution of US exorbitant privilege, which means that unlike any other economy or country, US can run excessive fiscal and trade deficit while gaining a net foreign income as well. So that exorbitant privilege might be lost if this all affected by this. So by running trade surpluses with the US, countries accumulate large dollar reserves, which they have been eagerly investing in the US treasuries. But that investment, that confidence in that investment is slightly being affected with all these tariff policies and everything. And so right now the dollar gets that reserve status all because of that. Around one quarter of US federal debt, like I mentioned, is funded by foreign allies. So owing to its safe asset status, and that's the one reason why dollar is dominating the global market and everything. However, once that confidence drops, you might have certain issues arising, and countries want to diversify away from the dollar and all those things. Yeah. And with all the tariffs and everything, there is a clear chance of an inflation. I mean, there might be an inflation hitting the US economy as well. Or this is a fear that most of the investors are having. Because of that, right now, already the federal debt is around $36 trillion, and a potential tariff-induced recession could push the fiscal deficit maybe up to 10% maybe of the GDP. That means that the Treasury has to issue new debt bonds and everything, which already into a struggling market, and that's gonna affect this thing as well. So this financial environment is very much important, right? And any impact or any all this risk into the financial environment, and that affects dollar status. And that also means you have a lot of unpredictability, and when it comes to Trump, we say that nobody knows anything, and that affects dollar status. But again, going back to my disclaimer, dollar will remain because of the network effect and the trade and the global trade that's happening in the dollar denominated this thing. But that means, however, there is a new trend being set.
Right. And so do you think the recent sort of eroding credibility of US institutions and inflation, do you think these have an impact on this, and how do you think this might be contributing to this overall trend?
Yeah, I'm pretty sure, with all this happening lately, the US role as a global liberal order leader is kind of declining, right? And that is definitely affecting the confidence of the investors and others. And the goals ascendance as a reserve asset, or one of the important reserve asset, and that's kind of coincide with US worsening fiscal deficit and the threat of probably stagnation or stagflation. All this pressures arising from the extreme tariff regime, nothing else, right? So nevertheless, this tariff measures recently announced by the Trump administration probably could lead to a decline in the global use of the dollar, especially if they are accompanied by the decline in the trust in the United States as a safe and liquid destination for global financial system. And when you have a very unpredictable regime, when you have an unpredictable policy, that means the confidence in that institution, confidence in that entire ecosystem goes down. And especially what would be the Fed role? Fed means who would be controlling the interest rates in the economy, in the US economy and everything. How much of political interference is allowed is also comes into question. And so the willingness of both the sitting president and the Federal Reserve Chair, usually tolerate inflation above the, so willingness to tolerate inflation above the 2% targets fuels anxiety to investors. And historically, gold is always considered as a excellent hedge against inflation as well. So yeah. So I say that policy uncertainty exacerbated by abrupt and ideologically driven shifts in the policy, that is the worst thing that you can do to any kind of investment. So, and so it's also kind of an investment that they do.
Thank you. So I think what I would like to understand after getting this sort of context behind why this is happening, what could be impacting this, and so I would like to understand what role does gold play over here, and why is gold emerging as a neutral reserve asset?
Yeah. So I want to give that a bit of history here first. So gold has always been, actually before this Bretton Woods system and all came into picture, gold, like countries fix their values of their currencies to a specific quantity of gold. So we had this gold system existing before the Bretton Woods system. And then the Bretton Woods system came, and the US, which was the most stable economy post World War II, agreed to peg their dollar to gold at a fixed rate of US dollar like $35 per ounce. So while all the other currencies, they pegged their currencies to the dollar, and the fixed link to gold reinforced kind of the confidence in the US dollars. That's the confidence in the US dollars came into picture. But in 1971, President Nixon, he suspended the convertibility of the US dollar into gold and said that, that was the collapse of the Bretton Woods system. And there's quite a lot of background there. You had the Vietnam War happening, the Greater American Society, kind of a welfare programs that happening in the US. So, and because all this happening in the US economy, countries wanted to convert their dollar reserves into gold, and most of the countries started withdrawing their assets from dollars as well. So that means then President Nixon said nope, we're not allowing that, and we're starting a new system of fiat currency. Basically, a value of a currency is just because the country that is issuing giving that value. So it's a kind of a floating currency. So this floating exchange rate, which is the value is purely determined by the market forces itself, said that so dollar is no longer linked to the gold, but it has value because the central bank, the Federal Reserve, is issuing the dollar a particular value. Okay, so that's the system that we have been following since then, right? However, now this thing is is there a shift towards taking or holding more gold than US dollars as reserve asset? You can say that like you have mentioned in the introduction, gold is increasingly becoming a reserve asset, and gold is somewhat uniquely suited to benefit from this dollar's decline because it addresses certain issues that right now the US administration or the uncertainties in the global trade is posing, right? So one is that it's a clear hedge against the instability, like we have mentioned. So gold is reasserting its role as a risk-free asset, and it's viewed as a store of value beyond any sovereign's reach. Despite what happens in the global trade, they feel that gold would have that value remained forever. So that's confidence is what something is that. And like you have mentioned, across the world, a lot of foreign central banks are actively stockpiling on the gold, and official sector buyers, particularly developing emerging market central banks, they have become the dominant marginal purchasers for gold, actually creating a durable floor beneath the gold price as well. So, and you can say that maybe it's kind of building a foundation of a multi-asset reserve system, because we're we had a phase of globalization. Now, slightly we are moving towards deglobalization. I don't know whether we can say that, but the certain trends, certain patterns are emerging that we can say that. So gold has much more neutral nature than any other currency, right? Whether we have to, if we say that, okay, if not dollar, can we move to euro? But the uncertainties that also could pose is also definitely there. So it's neutral nature, liquidity, recognition, trustworthiness, all this kind of make this a much more ideal solution for now. But again, their role will definitely remain and not as high as dollar because of the network effect, how much dollar is being used to trade globally and all those things. And like you mentioned, I think you mentioned in the introduction, 1996 was the last time the gold was one of had the greatest shares of global reserves than treasuries itself. So that date is quite significant. So that was the time when they launched euro. Right, so all the European countries, including Britain, which didn't even join this single currency union, European Union, the single currency union, and they said they all sold their gold aggressively in the late 1990s ahead of the launch of the euro, and that's why you had gold slumping to around $250 or something and per ounce in 1999 around that time. And yeah, in 1996 onwards, you see a huge slump happening as well. So then the central banks adopted something called Washington Agreement that effectively capped the sales of gold. Yeah. So yeah, so 1990s was not a golf friendly time. It was a period of solid growth, low and stable inflation, and you had subdued macro volatility. And this is also time that a lot of countries were took up liberalization and all those
Right.
things. So yeah, and that time US also had a budget surplus, all those things. But now if you look at it, the trend is moving towards a very different direction.
Right.
Yeah.
So I think now to sort of bring the conversation together, uh, what do you think, if anything, if there's any significant impact here, what might be the impact on the Indian economy as a result of this trend, and also, if you have any concluding thoughts on this whole global scenario that we're seeing, any final thoughts at all?
Yeah. So, like I was stressing from the beginning, there is currently no other currency or any group of currencies or arrangement of currencies that could challenge US dollar's dominance right now. Even a smaller role of the dollar in global trade transaction would not immediately challenge its reserve currency status. Given the lack of investment alternatives in other currencies at a scale comparable to US markets and the liquidity that it offered and all those things. So the dollar has also benefited from strong global network effects that would be difficult to replace. And even if you want to replace it, the cost for any country to divest into other currencies remain prohibitively really high, unless all the other countries do the same. So all of the countries are taking the decision together. Maybe slightly there might be some chances of it. However, you see a lot of these trends being there, and you ask the Indian question as well. And although we also have been taking a lot of initiatives and steps to use rupee trade settlement mechanism, it also comes with its own challenges, its own limitations and everything. So you have to have really large trade surplus with the countries if you want to use rupee as a
Right.
settlement mechanism as well. So India also have to continuously rely on dollar, and of course I think probably India is also stockpiling on gold, not sure of that statistics, but this all are happening. And I think the best thing for us to keep watching what's happening in the world. The impact of Trump's trade policies is not just on the export sector, but it has larger cyclic effects on other things as well. And currency is one of those things.
Yeah, lovely. I think this is a space that definitely we need to watch out for. And thank you so much, Anisree, for joining me today. And I think this was a very interesting conversation. I definitely learned a lot. And yeah, thank you all for joining in. We'll see you in the next episode.
Thank you.
If you liked our show, dive into Takshashila's research on technology, strategy, and economic affairs. Check us out at our Twitter handle at Takshashila INST or our website takshashila.org.in.